Why is it that so many people think that they have an advisor managing their money, but they don't?
It's because it's how it's marketed to them. Nobody's actually managing that money for them. They have to go and pursue that. Big mistakes that a lot of people think is that they hear target retirement fund and they take it at face value. Those are managed for you. Managed means that you have a person tailoring the investments within those based on your personal goals.
The organization that has my money, so where I log in, if I log into whatever.com, that's my financial advisor. And that's not true. That's just where your money is held. It's got to be held somewhere, but are you actually getting any advice? The question I want to ask you is, if you had 800 grand in cash, would you buy the My name is Tommy Nickerson. I'm the Senior Vice President here at Florida Financial Advisors, and I am sitting down with
Jenna van Valkenburg here, Associate Vice President here at Florida Financial Advisors.
Great. Well, Jenna, thanks for sitting down. I just want to have a conversation with you today. I was talking with someone earlier about client meetings, new client meetings. What are some of the horror stories? What are some of the most positive, pieces of impact that you've been able to make, and so forth. So I'll just start off by asking you a question. When you sit down with anybody, and it comes to talking about their personal finances, what do you think are some of the biggest questions that you always get? What's like the most frequently asked question that you get from a client meeting?
Yeah, great question there. Most frequent, probably, what are my options and how can I do better than what I'm doing today?
And when you think about what are my options, what do you mean by that?
Great question. And they typically mean it pretty broad as well when they ask it. What are their options? More so referring to things like investments.
Yeah.
A lot of people think that they're very limited when it comes to 401k investments. A lot of people think that just rolling over an IRA into a bank or somewhere automatically means it's managed.
Yeah.
I do a lot of people with it sit in cash before for years.
Why is it that so many people think that they have an advisor managing their money, but they don't?
It's because it's how it's marketed to them.
Interesting.
So, for example, think of Fidelity 401k.
Yep.
They have advertisements for advisors,
Yeah,
per se.
of course.
But they roll their money there. Nobody's actually managing that money for them. They have to go and pursue that, whether it be with Fidelity, whether it be with somebody independent like ourselves.
Yeah, I think the confusion is, what is a record keeper on a 401k plan? What is a custodian on a 401k plan? And what is a personal financial planner or personal financial advisor? And I think a lot of times it's the organization that has my money. So where I log in, if I log into whatever.com, that's my financial advisor. And that's not true. A lot of times, no, that's just where your money is held. It's got to be held somewhere. But are you actually getting any advice? And I think that's where people need to connect the dots, is to say, oh, I haven't gotten any advice. I haven't sat down. What are some of the questions that you ask people that starts to get them thinking that maybe they haven't been provided with a service that they assume they've been provided? What are some of the questions that get them thinking that?
What's your current strategy?
And they don't know the answer.
Knowing that you have a reason behind the changes that you're making, if any at all.
Got it.
That's how I know if they're truly getting advice.
I always think, I go, when's the last time you sat down with somebody? When's the last time you made a change? Why did you make that change? And all of a sudden I hear, well, I haven't sat down with anybody. Or the last time I sat down with someone, they came in with a couple pizzas and they told me, here's the options of the plan. But information is different than guidance. Or they don't have, like you said, a reason for why they're invested in the way they are. They just say, well, that's how my custodian, my record keeper has it set up. And shame on us as a society for letting, a bulk of people in this country, a bulk of their wealth is in a retirement plan at work.
Yeah.
And most of the time what I found is those plans are actually not getting any service when it comes to advice that's personalized. It's generalized statements and, here are your options. Is that fair to you? And if you're listening to this and you feel like, oh no, that's maybe a click that says, okay, I've now prompted myself to maybe have a conversation with someone that's not my HR department, right? When it comes to investing in my financial future. I want to switch gears with you a little bit. One of the things you said there was company stock.
Yeah.
I find this to be one of the biggest challenges that I've faced in terms of helping clients or prospects make financial decisions when it comes to company stock. For example, we have a lot of clients at Johnson & Johnson. We have a lot of clients at many different companies that just sticking out in my head where, executives get big stock, they have options, they have RSUs, whatever it is. And many times it takes up a boatload of their portfolio, right? So I'll give you an example. There's a client I work with, and I want to say about 40% of their invested net worth was invested in a company stock. And good. I'm happy that they got that money. Let's say they had $2 million, right? So we're talking $800,000 that's invested in a company stock.
Yeah.
How do you help that person understand that they may or may not be making the right decision by holding 40% of all their money in one holding, even if it's the company stock, the company they work for? How do you maneuver that? Is it, do you give them advice? Do you let them make their own decision? How do you maneuver through that?
You don't want to take too much of a stance on something like that,
Okay.
even within your own personal beliefs. However, put it into perspective, nobody knows the company like the people who currently work there.
Yeah.
However, there's two types of risk. There's market risk. What kind of risk am I taking on compared to the S&P 500, the NASDAQ?
Yeah.
But there's also business risk. I had a client who was holding 20% of his portfolio in Tesla stock.
Yeah.
All the hurricanes hit South Florida, where everybody owns a Tesla. The engine started blowing up from the salt water,
Yeah.
and it caused Tesla stock to tank. That's business risk, and you run that risk.
Business risk is also, the company could be a great company with great market share and phenomenal products, and all it takes is the CEO to get filmed doing something stupid on a Saturday, right?
Yeah.
And then half of your portfolio's in the gutter. How do you put a valuation on the CEO of a company getting recorded an Instagram reel doing something he shouldn't be doing, right? You can't put a value on that. One of the things I will say often to people who have a large portion of their money invested in one thing, whether it is company stock or stock that they chose to invest in or whatever, as I said, if you imagine that money, so the person that has $800,000 out of their $2 million in Johnson & Johnson stock, if that's you, the question I want to ask you is, if you had $800,000 in cash, would you buy the stock with it? And this is something, my father-in-law actually gave me this advice. He said, I own some real estate, and there's a couple pieces of property I don't know how I feel about. And he says to me, because I'm thinking about, do I sell it? Do I want to play landlord? I like it, but I don't live in it.
Yeah.
What is it worth to me? And he says, well, if you didn't own it, and instead you have all the money that's in it in cash, would you buy it? And I said, no way. That would be, no, I wouldn't even think about it twice. So if the client is saying, I'm not willing to work past a certain age, and I'm not willing to live on less than this amount of money, then I have to now filter out all the options or all the scenarios that would put them in that position. What's weird is that a lot of times people want to put themselves in that position because they only think about what best case scenario is and not what worst case scenario is. And I think that's difficult. We use the 3-bucket approach often with people, specifically those that are coming up on the timeline in terms of when they need the money. I use retirement as a good example, right? So I'm a 50-year-old. I work at Lockheed Martin. I've got $1 million in my 401k. What can you do for me, right? And a lot of times I go, well, let's talk about the 3-bucket approach. Can you define the 3-bucket approach for me?
Yeah, it's a tailored approach based on needs of retirement, specifically in this case. Your liquidity bucket comes number one. If your HVAC goes out on the house and you're in South Florida, last thing that you care about is your mutual fund in a situation like that. It's when you want the cold hard cash.
That's right.
So once your liquidity bucket is filled, moving on to the next priority, that's going to be your income. All right, for a 50-year-old who's at Lockheed Martin, he's probably making decent money. However, that becomes a need when retirement comes along and he hangs up his shoes for the last time there.
Yeah.
So fulfilling income needs, whether that's through something like a pension that they're receiving from their Social Security, but fact of the matter is, Social Security doesn't fulfill most people's spending needs. Lucky people out there maybe still have a pension. That's on the outs for most people, so they can't rely on that.
Got it.
So how are we going to utilize the money we have saved today to fill those income needs? Once that bucket is filled, per se, or taken care of, then you move on to the growth side of things. It's kind of like the wealth building bucket. It can have different priorities, of course, within that bucket. Maybe it's family legacy. Maybe it's increasing tax-free growth before RMD age hits. Maybe it's just growing the bag out of your money or protecting all of your money now that you know your income's fulfilled.
Yeah.
That's the purpose of the 3-bucket approach.
I love that. As you're saying that in my head, or in anyone's head, as you're listening to Jenna say that, what I would be almost visualizing is, what is the list of my priorities that I hope my resources can solve for, right? So I say this a lot. Money doesn't mean anything unless you can apply it to your life, to the things that you want for yourself, and to be able to do what you want to for the people that you care about, right? It means nothing. You can get to 65, you don't take it all out and lay in it, right? It's about, well, what are you actually doing with it? And so can you list out your priorities? Behavioral financial advice. What are your values? How can you use your resources in order to live in alignment with those values? So I want to be able to spend time with my family. Okay, well, what does that look like when it comes to financials? Well, we need to make sure that means that you can retire at an age where you can spend the time no longer listening to your boss and instead with your kids. Okay, so what financially needs to be true in order to do that? Well, I would need to replace 70% of my salary. Okay, so then why are we talking about buying stock in what AI fund, and what's, what place in the market is going to explode? Why are we not talking about how do we replace 70% of your salary first?
Their priority for their clients, and quite frankly, the only priority is making sure they're insured enough.
It's an insurance-based organization, which is fine. And I think that's an overcorrection, right? Where when I was new, and you probably can relate with this, I didn't want to talk about insurance with people because I thought when I said it that they thought that I was just being some insurance salesperson.
Yeah.
Right? And so I avoided it because I didn't like the feeling that a client would have, or I thought that they would have, that I was just trying to sell them something that they didn't need. Mm-hmm. I've changed on that, and you have to fight the good fight, right? So now what I want to talk about with clients is, what do you got in life insurance? What do you have in family protection, disability, long-term care? And the reason is, as you mature in this world, you start to realize that life is not as, you are not invincible, mm-hmm. right? Bad things happen all the time. I don't know about you. I don't know anyone that's made it out of this place alive. So now that has to be brought into the conversation. So it's almost an overcorrection because there's been so many firms that it's all they talk about. So then other advisors want to make sure they lean away from that stuff, like you or I when we were new.
Yeah.
But that stuff is incredibly important. And it's almost like a dirty word. I think about life insurance and annuities, right? It's a dirty word a lot of times. But you and I have probably both seen the impact that or are you deciding based on your lack of experience and knowledge what you think is right for somebody, even though it's not your money in their future? Have you ever been surprised by presenting options to a client and then what they chose? Do you have any examples of when you thought you knew what was right for somebody and then were surprised with their answer? Any examples of that at all?
Yeah, absolutely. Client of mine was under the impression that they wanted to be more conservative than they needed to be.
Got it.
They were 5 years out. They are 5 years out from retirement.
Okay.
Already had their income secured through a pension. So that meant, in their case, that they got to be either as aggressive as they wanted to be, because they had all the money saved that they could need in the world for retirement 5 years, or they could be fully conservative with their money. They didn't need to put anything on the line to secure their retirement income and assets needing to be saved. Showed them one of the more conservative options, thinking that it made the most sense for them. However, through showing them different options, surprisingly went with the one more aggressive because they knew that they could take risk. They had plenty saved.
So what I'm hearing from you is that by you providing an educational experience, drawing out the future for them, that then enabled them to be empowered to make a better decision than what they would have without that education and experience. Is that what I'm hearing from you?
Absolutely. Power of choice.
Power of choice. This has happened to me too many times where, we'll have an introductory meeting with somebody and it sounds like, well, I want to be risky. I want to be aggressive in my money. I don't want to pay any fees. I want to get I want you to give me the best returns and so forth. And I mean this with all the respect. I will always listen to what a client or prospective client tells me that they think that they want. Mm-hmm. I'm going to almost ignore it when I present them recommendations.
Yeah.
I'm going to provide them recommendations in alignment with what they told me they want, but I'm also going to provide them with ideas and opportunities that don't meet the criteria of what they asked me for. And the reason is this is, I'm working with someone right now, and when I first met this woman, she's very smart about what she's doing with her finances. Her request to me was she didn't want to be conservative. She didn't want to be in anything that was too safe, too fixed, because she felt like she would not get any returns.
Yes.
And I said, okay, so let's talk about that. What I learned is that from her point of view, 90% of her life savings is in her 401k plan. And if you look at a 401k plan, and I could be off on this a little bit, the only real conservative options they give you are a bond mutual fund or something like a stable value money market cash, right? And when she looks at those options, she decided on her own, well, those things stink. I'm not happy with the performance there. It doesn't seem to be worth the cost that I'd be paying for them. Or when I look at inflation, the performance is actually negative on all those things. Mm-hmm. So she says to me, well, I want to be aggressive because of the fact that she doesn't want to be conservative with the options she thinks that are available. Yeah. And shame on me if I just let that be, if I take that at face value and let that be how I drive recommendations. So I say, great. So we're going to show you aggressive options. I'm also going to show you conservative options as well. Mm-hmm. So we start looking at the entire marketplace of what's out there and available to her. She's made the decision to go with a more conservative portfolio than being a 10 out of 10. Mm-hmm. Because now that she's been educated in terms of what's actually out there, she likes it. I've been telling this joke all week. If you're from the Northeast, I'm from the Northeast, right? And you grew up, mom used to make fish and chips, right? So if you live in England, right, the only fish you know is haddock, and cod, mm-hmm. right? And all of a sudden you move to Florida, and if you're in Jacksonville and you go to one of the fish camps down here in Jacksonville, and mm-hmm. you go in and they say, and you're looking for fish, and you go, well, I'm hungry for fish and I want cod, mm-hmm. right? Shame on the restaurant if they don't also introduce you to what mahi-mahi is, right? Or snapper or grouper. Mm-hmm. Because you could still decide to go with cod if that's what you actually like, but you actually don't know what else is out there, mm-hmm. right? The world is more than haddock and cod, right? Yep. And if you only know it to be haddock and cod and you dislike haddock and cod, you actually might avoid fish entirely, mm-hmm. but there might be fish out there that you actually enjoy, or fit the needs of what you want for yourself. So this is so interesting, and it happens on both sides. Same thing with fees. The reason clients don't want to pay fees is they probably had a bad experience paying fees for things that didn't provide value to them. Yeah, fees are a problem in the absence of value, but with value, I'm willing to pay for it. Right? How many things in your life do you pay for because you value what they give back to you? Oh, right? Plenty things, right? I know so many people that have decided to pay more for a car than they had to because they wanted a certain sport package. They wanted mm-hmm. a certain, they wanted certain features. They wanted the sunroof. They wanted the hybrid package, right? But then when they come to their finances, the only thing they care about is paying no fees. Mm-hmm. Well, that's a weird priority, in my opinion. You have any thoughts on that?
No, I agree. A little bit back to what you were earlier talking about as well too. In most investments, people think that no risk equals no reward. Not always the case, but also the same for the other side of the spectrum.
Got it. Yeah. Got it. I think about the decisions that people should make. It's asset allocation. Mm-hmm. So where is my money and why? Then it's style allocation, mm-hmm. right? Then it's product allocation, and then it's rebalancing. So first off, asset allocation. Okay, where is my money? Why is it in that place? Risk. Volatility, whatever it might be. Yep. Style allocation, when you think about the stock market's not just one thing. There's different style boxes, right? And I could probably put this on the screen as well, in terms of where you could actually decide to put your equity investment. Am I leaning more towards dividend stocks, growth stocks, small caps, large caps, whatever it might be. And then product allocation. Well, I could be invested in equities in various different products being a mutual fund or an index fund, an ETF, an individual stock, a variable account on an insurance product, right? Whatever it could be. Those are different products that you can do the same thing with. You could still have asset allocation, style allocation in different levels of products. And then the fourth thing is rebalancing. So what's going to happen is if I have a portfolio that's conservative and the other side's aggressive, and the market does really well on my aggressive side, it's going to go out of whack, right? It's going to drift. So then when do I rebalance and bring it back to where I want to snap that allocation in to where we started? The efficient frontier is something that I think everybody needs to understand before they go and run towards returns. We want to make sure, are we getting the best risk-adjusted return that we can, get ourselves highest on the efficient frontier as possible. Yeah. So, Jenna, anything else that you think people should hear? Other questions that you always get asked, mistakes that are commonly made from clients or people that you may meet with? Anything else that we could get from you today?
Great question. I think two big main things here to bring up. Big mistakes that a lot of people think is that they hear target retirement fund and they take it at face value that those are managed for you when it comes to a 401k plan.
Okay, so let's define this. So you're talking about retirement target date funds. Mm-hmm. So these are the funds in a 401k plan that say life cycle fund, the freedom fund, right? the ones that are designed with a year at the end of them that says, okay, if you're going to retire in 2040, just buy this. That's what you're referring to?
Exactly.
Okay, got it.
Exactly.
So now we know what we're talking about. We're talking about target retirement funds in a 401k plan. And what is the common misconception people have with them?
They think they're managed.
They think they're managed.
They think that managed definition
what do you
for
mean by
you
that?
and I as advisors is very different than an investor who is not an advisor out there. Managed means that you have a person tailoring the investments within those based on your personal goals. However, that's not the case. Imagine you're trying to retire early at the age of 55. You're in a target retirement fund that is picking and choosing your investment options for you based on retirement 10 years later than you're actually planning for.
Got it.
You're not getting the tailoring that you need in order to achieve those. Yes.
It's not personalized. Yeah. And then, we just want to make sure we're saying everything right. They're technically managed, but they're managed by something called a prospectus, right? And a prospectus, think about it this way, it's the rule book. So the prospectus is it's the Bible in terms of how this fund is going to work in that way. So I remember the first time I hired an interior designer. And I found this person, good reviews, whatever it was online, and I hired him. And the interior designer, I think she quoted me $200-$300. I didn't know what interior designers should cost. So I said, all right, I'll pay you $200-$300. That sounds cheap, but okay, good deal.
Agree.
And over the next couple of weeks, she keeps coming to me with recommendations in terms of artwork and furniture. And it all looks the same. I don't like it. And I said, well, what other options do I have? And so she goes back to the drawing board. She comes back, and it looks like the same thing that I just said no to. And so, well, what other options do you have? And she's like, well, try again, right? And it's the same furniture in a different color. And I'm like, okay, well, I know for a fact, because I just drove down the street one day looking at all these different, well, that guy on the side of the road's got some cool artwork, right? Like, why don't you just go source that for me, right? And what she kept doing is saying, well, here's the kind of options that you have. And I said, well, I know that that's not true. All it takes is me walking around Crate and Barrel, right?
Yeah.
Are you shopping just from Crate and Barrel, right? So I fired her. I said, this is not the service I look for. I found a different interior designer who charged me $4,000 just to hire her. This woman was phenomenal. She sourced, curated artwork from around the country, from small independent family shops. She was finding furniture that I'd never seen before, that was one of one, whatever it was. And I was willing to pay for it because I actually got the service that I was looking for, of someone going, pay me a fee, and I will actually go do this job of shopping the entire marketplace to find things that are personalized for you. So Jenna, anything else that we can grab from you here today?
I think that covers most of what I came prepared with.
Good. Thank you so much.
This content is for informational purposes only and should not be considered investment advice. All investments involve risk, including loss of principal. Past performance is not indicative of future results.